Ed Yardeni is with us, President at Yardeni Research. Ed, good morning. Good to have you with us here. Prashant this side. The U.S. indices look a little weak, technically speaking. They've broken some averages. Do you expect a 4-5% kind of a pullback for indices from here?
Well, we're down 5.5% from the March 28th peak for the S&P 500. I think that we could go lower. We just last week broke down below the 50-day moving average. And then the next stop might be something in the neighborhood of 4,800, which might find support at that previous all-time record high that we made way back in January 3rd of 2022. And if that doesn't hold, then it'll be more like 4,700, which is the 200-day moving average. And that would be a full 10% correction. So I think we could get a full 10% correction on this. I think the market's going to, hasn't completely discounted the fact that we'll probably get no rate cuts by the Fed this year.
Okay, no. Sorry, what did you say? You're not expecting any rate cuts by the Fed this year, correct?
I'm not. Okay. Look, I think at this point, the Fed was disturbed by the hotter than expected CPI inflation numbers during January, February, and March. And now we're getting to the political season. So I think they probably won't do anything until after the election, which would put them at the November and December meetings. But I think the economy is going to continue to do well.
Okay, so if that's the base case, right, Ed, that there is no rate cut this year, and which is the common narrative now, how are you approaching emerging markets like India? Because that seems to be the case here as well. Growth is good, things are picking up, but we are heading into a huge election season. So how do you approach the equity markets now?
Well, India's had a tremendous move in the stock market. The Indian economy has been doing very well. A lot of investors have already discounted the fact that China is not doing well. And as a result of that, some of the benefits of that are actually going to India. The election result, I think, is pretty well anticipated. And the government, if it remains in place, has promised to make India the third largest economy in the world. So, they're certainly talking a bullish scenario for the Indian stock market. But on the short-term basis, I think there's a possibility for the 10-year bond yield in the U.S. to get up to 10%. There's a possibility for a full 10% correction in the S&P 500. And meanwhile, the dollar's strong. So those are not conducive to emerging markets generally on a short-term basis.
Hi, Ed. Good morning. I recall in the past you were talking about the S&P 500, I think, approaching that 5,400 odd mark. If we do get the other 4.5% correction that we just spoke about, that completes the 10% correction, what could be the year-end targets then on the S&P 500?
It'd still be 5,400. On March 28th, when we got to almost 5,200, 5,300 on the S&P 500, people were asking me if I was going to raise my 5,400 target for the end of the year. I said, no, I think the market needs a pause here. It's discounted a lot. The valuation multiple is awfully high. I think from here on, we have to have an earnings-led market, which I think we will. But I think it's going to be a more gradual ascent. We've had a melt-up, really, from October 27th of 2023 through March 28th of this year, and I think it's time for a pause.
We have these large companies, the so-called Magnificent Seven. 4 out of the 7 are reporting numbers this week, Ed. Tesla will report on Tuesday. I put out a piece on Friday looking at not just Tesla, but the general slowdown that EVs are seeing around the world, at least the big important regions around the world, be it China, Europe, US, etc. By the way, Elon Musk was supposed to be here in India. He was supposed to be here on Sunday, and then was supposed to be in the PM on Monday. But of course, that's been deferred. Just a quick thought. It used to be at least an important indicator for the market overall before NVIDIA took that charge. What's your sense here, Ed?
Well, I think, Tesla is clearly viewed as a technology company, but it's also a car company. And the car company is a different kind of business than a semiconductor business. But I think Tesla is not quite as magnificent as it had been. We're also seeing that NVIDIA has given up a little bit of its meteoric rise. The Magnificent Seven, they're not all that magnificent. They had a bad week last week. Amazon basically was the only stock that outperformed the S&P 500, and it was still down a little bit. I should say Google was the only one. Alphabet is another name for it. But I would say all in all, they are growth stocks, and growth stocks do tend to underperform when interest rates are going up, which is what they've been doing.
All right, let's see how this plays out, right? Tesla has gone ahead and cut prices in China and in the US as well. And we've seen a steep fall in their sales. They've laid off 10% of their global workforce. So things are getting pretty ugly over there. But Ed, thank you so much for stopping by and speaking to us at CNBC TV18. Appreciate your time here. Have a great week ahead.